Robin Hood froze my trades, left me for dead. But then a light shine from Wall Street bets. Buy GME, brother, don't sell yet. Hold the line. Diamond hands. We ain't leaving. That's the plan. Citadel sweating, Kenny's losing his mind. He's shorting the truth, but the tendies are divine. Options expiring, gamma squeezing the room, and my stock's rising up like it's a financial boom. Lure, I put my faith in GME. Lure and AMC delivered me. Lure from debt and fear and margin calls. Lure to diamond hands and YOLO walls. Lure to the moon. We ride, we fly, we ain't immune from faith and stokes and rocket fuel. Lure, we bless this trade in the Reddit school. Lure 1 share, 2 share, 5 in my bag. Game, stop preaching like an American flag. Ex-Citadel crying, hedgies in doom, while retail sings in full costume. To the mall, yes we go, with memes and dreams and gamma flow. They tried to short, they tried to shake, but our conviction just won't break. Oh yes we go, with memes and dreams and gamma flow. They tried to short, they tried to shake, but our conviction just won't break.
Good Monday morning, Outliers. How are y'all doing? Man, it's a beautiful start to the week. It's going to be a short week of trading. I am out starting Wednesday afternoon, but I'm not going to miss much because the market only has a half day on Thursday and is closed on Friday. My plan is if I'm still holding anything by Wednesday afternoon, is basically I will continue to hold into Thursday, but I will not look to add any new trades. I will know exactly where I'm going to get out. So I should be able to do everything I need to from my phone. So I'm really not that stressed on it this time. Now, there have been times where I've really tried to like do all kinds of great stuff, all kinds of fancy stuff while on vacation. Don't try and do all that. But if you know where you're going to get out, like I'm talking about today, we're going to make that plan Wednesday afternoon. So I'll know exactly what to do once Thursday comes within like a moment's notice. So it should be super easy. So I am super stoked to see everybody here. Let me turn on the comments. We're going to be playing bingo today. I hope everybody enjoys bingo, but you can't win bingo unless you put hashtag outlier in the chat. Not very many people have done that yet. You need to put hashtag outlier. Oh, that was the wrong button here. That was the link to this video. You need to put hashtag OVTLYR in the chat. That is the only way you can win Big Money Bingo. And I want you to win. I want you to win. Let me clear my scorecard real quick while we get ready. While you're typing hashtag outlier in the chat, I'll give you just a moment to catch up. There are no excuses. If you don't put hashtag outlier in the chat, that's on you. That is on you. Boom, there we go. All right, let me zoom it in. And then we want to put Big Money Bingo on the better on the left, and then we put the video on the right, or is it better on the right, the scorecard on the right, and we put the video on the left? Let's try it right now. Let's see what happens here. And then if I put myself my normal spot, is it gonna make this any bigger? No. I feel like that. Oh, but then I'm covering up that slide over there. Okay, so we need to do it the other way. That's what I was trying to figure out. Okay, but then the chat covers up the big bingo card a little bit. However, you can still read what it says. So that will work. That will work instead of my big head being in the way. So we'll do that. Okay, so keep it coming. Keep it coming. Hashtag outlier in the chat. You cannot win unless you put hashtag outlier in the chat. Let me see if I can answer any questions in the chat before we get started here. I scrolled all the way at the top to see Stumpy in Georgia and VacLab here. KS Fresh. Pre-market does look great this morning. Paul says, good morning. Maybe doing some rolling today? Great chance of that, dude. But, you know, the market has 6.5 hours to be open today, so we won't know for a while. We won't know for a while. It's good to see you, Brad and Joe. Glad my Outlier University students are here today. What's up, Sean? Good to see you, my friend. Scott is here, although he goes by Little Billy on YouTube. That's Scott. Let's see. Manny says, here we go. All right, looking for any questions. That way I can answer them real quick before we get started here. James, good to see you. Good morning, Ryan. Hey, Shane. Shane, I instantly bought that book you recommended. So Shane gave me some great feedback. So I don't know if you saw on the Sunday video, people love the news stories. People love the story of the stock. And I think that's where I have been failing on YouTube. Because really, I don't care about I do not care about the story. How much do I care about the story? 0. That's how much I care about the story. All I care about is price paying. At one point in time, we had this really catchy thing we could say, but then we got a cease and desist. So now we have to say profits follow price. So I really don't care. I only look at price. But people on the YouTubes, they love a good story, right? They're looking for those stories out there. And so I tried to add some of the news stories in, which actually I did find a little bit interesting. So I think I'll be incorporating that more often. But Shane had an idea. He recommended this book called Laughing at Wall Street by one of the market wizards, which I ordered. Unfortunately, it's not available on Audible. I would have been listening to it already. You know what I did start listening to on Audible this weekend was Fooled by Randomness by Nassim Taleb. I didn't know he was a trader. I know he has he's really big as an author. That's where I'd heard of him from. It's from an author. But I didn't know he was a trader, specifically an options trader, interestingly enough. So that one was interesting. I didn't finish it. So I have a long way to go on it. He's very verbose. He has a lot of words to get through his points. So I don't know if he's saying, hey, you're getting fooled by randomness because the market's random, or if he's saying the market's not random, you're being fooled by whatever else, by the idea of it being random. So I honestly don't know. But I'll tell you one thing. In my experience, and you know, Larry Hite said this long before me, I have never met anybody who says the market is efficient who is a wealthy person. In fact, Larry Hite's quote, which we talked about last week, is everybody who's ever told me that the markets are efficient is broke. It's the former. It's the former. So he's saying everybody is fooled because it's all random. I don't know. Either way, oh yeah, Rick just listened to it. But doesn't it just go on and on? I mean, it's not bad. It's just like, okay, can we be a little bit more concise? A little bit more concise. I don't know if he's the one with the black swan theory. Or he says the technicals can be very dry and boring, even though they're the most critical. But adding news at least makes you aware of the recent catalyst for the company. I can get on with that. You know, one thing that's interesting to me, you've probably come across the can slim method of investing, which they are all fundamentals based, except the market part, right? The market has to be trending higher, the stock has to be trending higher, and it's like, how about you just lop off 90% of all the BS that you just covered and focus on the price? I really do not understand why they spend so much time building up all how fancy and smart can slim sounds, and then nothing matters until the price comes to play and the price goes up. Why not just focus on that part? That's all that matters. Let me see. You can only win by putting Outlier into action. I like that. The story is the big reason why Felix gets traction. Now, listen, I just crossed 30,000 subscribers over the weekend. That was really exciting. Oh, good gravy. Let me show you my analytics, because you would be embarrassed if this was your channel. I mean that. And I don't mean that in an ugly way, but I have put over 2,200 videos out on YouTube. 2,200 videos up on YouTube. Only in 2025 did things start clicking. Only in 2025 did things start clicking. Now, it's clicking really bigly in 2025. Praise Jesus, finally. But if I show you my subscriber count here, you're gonna be like, oof, I would have given up on that ages ago. And I should have. If I had known that it would take me, jeepers, 7 years just to get to 30,000, over 2,000 videos, I don't know if I would have done it. I don't know if you would have told me that if I would have kept going, right? But let me see if I can. I'll have to turn off chat to show this better. Just turn off chat to show this better. So this is lifetime, right? This is lifetime. Basically nothing happening since 2017. Nothing happening in 2019. Nothing happening in 2020. 2021, we picked up some traction. That's when I was trading AMC. That's when I was on TV doing some cool stuff here. And then it went sideways for ages and ages and ages. And look where Chris figured out, hey, wait a minute. I think I should try a different strategy on YouTube. Can you point on the chart? Can you point on the chart where I started focusing on what actually works? It's probably pretty obvious here, right? I'll give you just a moment to figure that out. I'll give you just a moment. Okay, moment's over. Yeah, right here, January 5th, 2025 was where I figured shit out. Booms, right? Then in the last 90 days, I mean, it's just like that. You would love to buy a stock that's going up like this, right? Last 365 days, you can see, boom, right there. So as great as it is to see this kind of growth, it didn't happen on accident. One of my quotes, I don't know if I ever heard this before, but success doesn't happen on accident. I mean, if somebody accidentally came into something, it's unlikely that they're going to keep that thing. Meaning, if they accidentally got wealthy, it's unlikely that they're going to keep that wealth. Look at lottery winners, right? If they accidentally put in the work, or if they accidentally made a viral video, that doesn't mean that they know what they're talking about. Okay, it really is the long game, not just in trading, but in all aspects of your life. So I'm really grateful that finally I figured something out. But in all reality, I focused in more on my trading than I did on my YouTubes. And then I was laying in bed one night, and as you guys know, I'm a believer. I was laying in bed one night, and God spoke to me, and he was like, Chris, you figure out YouTube, OVTLYR is going to be $1 billion company. And I was like, okay, let's do this. Let's do this. Lying in bed, just one of those hits of inspiration. Christopher says exactly. Well, preparation meets opportunity. If only you guys have been listening to me for the other 2,100 videos before you got here. If only, right? If only. But I'm super glad that you guys are here today. I'm super glad that it's worked out the way that it has, because it's taught me a lot in the process. And now I make videos that people actually watch, like you are watching right now. So I really appreciate you. God is good. That is exactly right, my friend. All right, let's change gears. Dana finally subscribed. Let's pay respects real quick to Dana, because I love Dana. He and I are going to share a Guinness one day. I believe in that. That's on my vision board. It's a picture of Dana. It's not actually, but I should do this. It's a picture of Dana. It's a picture of me, and both of us holding a Guinness. So Dana, you and I one day, we're going to hang out. But he finally subscribed to being an outlier. Dana, you rock, my dude. Glad you're here. All right. So we're going to watch this video from the Financial Wisdom channel. I love this channel. There is so much good content on here. But don't forget, you cannot win bingo unless you put #outlier in the chat. #outlier in the chat. So let me put on presenter voice and we'll get started here. All right, today is Big Money Bingo, and we're going to be watching this video called How to Trade with Discipline and Without Emotion. Now, one of the people that I learned from indirectly was Richard Dennis, and he said that he could put his rules in a newspaper, and listen, his rules got him to $290 million by the time he was 29 years old. So his rules really worked. But he said, his quote is, I could put my rules in a newspaper and nobody would listen to them, right? Nobody would win, because they need the consistency and the discipline for execution. So we're going to go through this today, and I hope that by the end of this, you will have the consistency and discipline to follow your plan. That way, maybe one day we can be talking about you here on this channel. So let's watch this video, How to Trade with Discipline and Without Emotion. Now, as we go, let me know what you see over here. Let me know what you see over here that we can add to Big Money Bingo, because somebody is going to be winning Big Money Bingo today. And if we get a double bingo, we're going to have two winners. So let's do this. How to trade with discipline and without emotion.
To trading psychology and the developing of winning attitudes, there is no better teacher than the market itself. After all, the lessons provided by the market in the past will help set the right expectation for the future. We only need to look back over the last decades to see some of the market falls, Such events can and should be expected in the future. A few of our videos in the past dig deeper into trader psychology, and in this video, however, we look more at the discipline portion. Several popular books discuss key concepts in trading discipline.
Wait a minute. Do we have a discipline? Consistency and discipline. I was like, wait a minute. I think we already have that. Consistency and discipline, like Richard James would say. Look at that. You're on the board already.
And we learn how to apply them to our own trading and investing endeavors. Author Van Tharp made a great quote through his teachings when he said, "A peak performance trader feels totally responsible for whatever happens in the market and can therefore learn from mistakes. These people typically have a working business plan for trading because they treat trading as a business." Once we fully accept that...
Dude, I totally agree with that. I feel like each trade you put on, or maybe as a trader, that you are an entrepreneur. I really feel that way. If you are taking these risks, it's exactly as if, and they talk about this in the How to Make Money in Stocks book, the Big Orange book. He talks about how if you're a store owner and you order a whole bunch of red dresses, but red dresses are out of season, you need to get rid of those red dresses as fast as possible, right? You don't want them sitting on their shelf for months and months and months, weighing you down. And then if yellow dresses become in vogue, you want to be buying all the red dresses as the store owner and then reselling them to all the women who are walking in the door, right? Now, I feel like that is exactly the same as if you are a trader, right? As a trader, you are an entrepreneur in the market looking for opportunities, looking for ways to buy high and sell higher. You're never going to be looking for buying low and sell high. If you still subscribe to the adage of buy low, sell high, I got news for you. You can be buying lower and 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 may never see a high. But if you're buying stocks as they're crashing up, which is what I talk about, buy stocks as they're crashing up versus stocks as they're crashing down, boy, life gets a hell of a lot easier.
The journey to become a disciplined trader requires treating trading as a business. The journey and eventual path to success will become much easier. Emotional control is arguably one of the main differentiators between an unsuccessful trader and one that takes a more disciplined route. So how do we become a less emotional, more disciplined trader? Mark Douglas, author of the popular book Trading in the Zone,
one of my top 5 trading books right there. If you don't have any trading books, go grab this one right here. It's not going to give you everything you need, but it'll at least put you in the mindset of being successful. My top 5 trading books are: number 1, Trading in the Zone; number 2, Turtle Trader; number 3, How I Made $2 million in the stock market; number 4, Trend Following. If you can get the 2012 edition, is the best. What is my 5th one? That doesn't matter right now, but this is one of my top 5 trading books. You got to get the, get this one. I'm stumbling over my words here.
And The Disciplined Trader links the money trading challenges to that of a trader's perception of the market. The first lesson is to know that the market is always right. Only you can be wrong, never the market. Second,
dude, that is so true. In fact, that's we're gonna have to get off the bingo card for a moment. That is how, oh wait, no, I don't, hang on. That is how I treat every single trading day, right? Now, my trading strategy, you can get as the PowerPoint in our Discord. You can get the whole thing, but it starts with this: what is the market telling us, right? The market is always right. Are you going to listen to the market, or are you going to try and tell the market what it needs to do? That is your choice, right? But I'm telling you right now, you need to be choosing to listen to the market rather than telling the market what it should be doing, right? Should is the most dangerous word in finance, yet so many people think that they can tell the market what to do. You are smarter than that at this point. If you're watching this, you know way better than that.
The market does not care about you. It does not care how much money you've won or lost. It has its own rhythm. It is only through experience, trial, and error that you begin to accept that the market has no emotion. Only you do. Remember, the market is an irrational...
Duh. Trade like a market wizard? That's a really good one.
Uncontrollable entity. Once we have the right perception of the market, we can then look inwardly at our own psychology. There are 3 aspects to consider: identifying opportunity, executing trades, and growing equity.
Okay. Have we got any others right here? Have we got any other bingo cards right now? N4 and B5. I was just thinking we probably got something by now. N4, don't predict. Yeah, I'll give you that one for sure. And then B5. I don't know if we got B5 market cycle just yet. N1, wait for confirmation. O5, mindset. I can get behind mindset. I can get behind that one right here.
Each are, however, hindered by emotional pitfalls, and traders will find it hard to succeed unless these emotions are managed, ensuring they do not interfere with the trading plan. One of the ways we can address these emotions is to create rules, and these rules help us identify opportunities, execute our trades, and manage position size and risk.
Okay. This is going to be following your plan. That is for sure. I will definitely give you that one. I3. Yeah. I will give you that one all day, my friend. What's up, David? You're right, dude. And so one of the key things of being a trader is having rules, right? That alone separates you, separates the best from the rest. Just having any sort of rules. They don't even have to be the best rules in the world, right? Just having rules. Now, you have to follow them. You have to follow them. Larry Hite, one of my mentors, one of the stock market wizards, he was the very first billion-dollar hedge fund manager. When we were working with each other, he said specifically, if you cannot follow the rules that you created, there was no point in creating them in the first place. You might as well just throw them out the window. If you're coming off of a loss and you're scared to take a trade because you're scared you're going to lose again, just throw the plan out the window. If you're coming off a win and you're like, oh, I know what I'm doing at this point. I don't need that plan anymore. I'm so smart. I have the Midas touch. Just throw the plan out the window, right? There's all these different psychology things that go into having a plan. And like I said, you can drive from Dallas to Disney World and you'll know exactly where to go the entire way by having the map, by having the plan. Having a trading plan does the exact same thing for you, right? It does not guarantee winners, but it does guarantee that you're going to save time, make money, and start winning with less risk. That is the point of having the plan, is knowing what you're going to do no matter what situation comes at you. By the way, if you want to win bingo, you have to type #outlier in the chat.
Such rules take away subjectivity and help our emotions from getting drawn into irrational market behavior. Having these rules is, however, not the complete solution. If we hit a series of losses following our rules, we start to doubt them.
Just what I said. Just exactly what Larry Hite said to me, right? At this point, you went 1, 2, 3, 4 losses. You're probably saying, oh, my plan is broken. I got to completely rewrite the whole thing over. This is so true. So true. Corey, I hear you. I'm prepping. I'm getting it ready.
Such losses can create irrational blind spots in our cognitive reasoning. The more we're hit by losses, the less likely we are to follow the rules.
Now, and here's the other thing too. If you have a strategy with a 70% win rate, there is a possibility you could go 30 losers in a row. Let that sink in real quick. If you have a strategy with a 20% win or 80% win rate, I should say, you could go 20 trades in a row losing, and then the next 80 win. That is a possibility. So that doesn't mean anything's broken. That just means you need to identify those opportunities that have the highest probability of the outcome you're looking for. And then once you find that plan and you have mathematically proven that even in the worst case scenario, you're going to be profitable, then these losers don't matter. When you have the losers, you literally do not even think about them, right? Let me go off script for a moment. What I want to do is I'm going to pull up my 2025 results, which there's not that many yet. I know. And then I also want to pull up the Monte Carlo analysis. And what we're going to do here is we're going to run this through the Monte Carlo analysis. And I want you to do the same, right? We actually have this link available in our Discord. And if you're looking for our Discord link, all you got to do is sign up at outlier.com and we'll shoot you that link. But this Monte Carlo analysis here will show you specifically how your trading strategy will pan out. But if you just willy-nilly guess, right? If you're like, oh, well, I have a 83% win rate and I win $1,000 and I lose $50, right? Psh, easy. I'm going to be a winner all day. First off, you've got to have the data, right? I keep meticulous notes. I know every trade that I've made for years. So I can plug my results into this and I can see, oh, you know what? My plan actually works. Can you do the same? If you cannot do the same, you're just, what is the thing? F around, find out, right? Alwyn's post right there made me think of F around and find out, right? If you can't back up what you're doing with records of trades you've actually made or paper traded because you're still trying to make that plan, and then if you can't put that into a Monte Carlo simulation, right, like this, and it show you what your predicted outcomes would be, and if your worst case outcome is still not profitable, you are not there yet. You're not there yet. So let's do this together, right? So these are actual trades that I actually made this year. I'm at 61% return with a 73.91% win rate. So I'll type this over here, 73.91. Now, this is holding on to my open trades right now. Now, this is going to look even better once the market opens today. But average win, let's put 35.57 as average win, 35.57. And let's put average loss at 19.54. 19.54. You could do this on small dollars. You could do this on percentages. You can do it on big boy dollars. Doesn't matter. Point is, we're trying to get those numbers in there, right? We're trying to figure out the expectancy. Hit run. Okay, this is going to run 1,000 different simulations. Now, the number you're looking for is right down here. What is your final equity balance? On average, this would return $771,000. Best case scenario, $923,000. Worst case scenario, let me repeat this. Worst case outcome, positive $620,000. $620,000 is my worst case outcome with these inputs here. I would say I'm doing something right. This is a strategy I can have all the confidence with. This is a strategy that I'm not scared of. If I take a small loser, I don't care, because I know that my strategy with real dollars can put up amazing returns in the worst case scenario. Now, once you can reach that point of confidence, that's when you start trading. Okay. When you can prove these numbers, that's when you start trading. If you can't prove it, if it's just your gut, if you're just hoping for the best, you're not ready, right? You're not ready. And I'm not ready to do the winners of bingo. But if you want to win, you got to put hashtag outlier in the chat. Let's keep going.
And this comes despite knowing the market is itself irrational. This cycle repeats endlessly until we accept that losses will occur. We must manage them accordingly with solid risk management and allow the market to do its thing. It's important to note, however, that rules should not be followed blindly. They must be considered from past performance and analysis that supports the viability of the strategy.
Boom! It's almost like me and Financial Wisdom made this video together, because he's saying the specifically exact same thing that I'm talking about, right? How are we doing on bingo? Did we miss anything? Did we miss anything? I'll give you one for free since I went off script. I'll give you another one for free. I'll give you weight in cash. I'll give you weight in cash. All right, let's keep going.
It goes without saying that following rules to a flawed or unproven strategy could lead to financial ruin. Another important aspect discussed in the book is expectation and goal achievement. Many new traders start with an expectation, maybe targeting $500 per day.
Okay, now we may be different in this. I actually want to find that slide for you real quick. We may be different in this. Hold tight. Because my rule is there are no expectations on the outcome of the trade. There's no expectations on the outcome of any individual trade, I should say. There are no profit targets for that. I just have a plan to get out when one of my exit signals happens. Now, these are some core concepts coming from trading in the zone that this video mentioned earlier. So I'm actually really curious to see what he says about that.
Achieving 100% annual returns. Giving too much focus on such targets inhibits the trader from developing a robust process. After all, the returns are simply a byproduct of the process.
Exactly. Right. Having rules is what separates the best from the rest.
New traders tend to have this in reverse, focusing on returns first and thinking about the process last, an approach I'm strongly against. Focus and energy must always be given to the strategy and the process first. A link at the end of the video expanding on trading expectations may be of use. After completing the study, preparation, and creating the rules and process, we need the discipline to ensure we always stay within that framework. Be as mechanical and as emotionless as you can without focusing on the financial reward. Psychology is the foundation of all successful disciplined traders, but there are several flawed psychological biases of failing traders which we should understand. None more so than the gambler's fallacy, or sometimes referred to as the Monte Carlo fallacy. Although
that's interesting. Monte Carlo fallacy, using the same name as Monte Carlo analysis, right? Wait, hang on. Let's Google up. What does Monte Carlo analysis? What is a Monte Carlo simulation? That'll work. Computational technique that uses random sampling to model the probability of different outcomes in a process that cannot easily be predicted due to the intervention of random variables. Okay, but that is definitely different than a Monte Carlo fallacy.
The myth is linked to gambling. The same belief is also associated with trading. First, let's take the game of roulette. Imagine a table which has seen the colour of red 4 times in a row. Would you be more inclined to bet black on the next spin? What if the table had 8 spins?
Okay, let's do that exercise together. 1, 2, 3, 4 times in a row you've hit red. What are you thinking is going to hit next? Type in the chat. What are you thinking is going to hit next, right? Red or black? So part of me is like, you know what? If red keeps coming up, red's going to keep coming up, follow the trend. But the other half of me is, you know what? It's 50-50, or we're due for a black, right? We're due for a black. Let me put it on black, right? So we've got exactly that. We've got black, we've got red, we've got green. Green, very good. Black, it'll always land on the 0 for you. 50-50, right? There's still a 50-50 chance on each one. But when you make this observation here, you could go of either direction. I don't know which direction he's going to go, but it's either I'm going to ride the trend, let's go red, or black is due. Black is due, so I have to put it on black. Past results don't influence the future. Exactly. Let's see what he says.
All seeing red. Would you expect black to have more of a chance on the next spin? Well, in both scenarios, there is absolutely no reasoning as to why the next spin would be black, or red for that matter. Remember, the wheel has no memory. The probability of...
There you go. Exactly what Scott said. Past results don't influence the future. It should be black. It has to be black. And to this point right here, I think is exactly what happens when people get into the market and they're buying the dip. Oh, it's going down, it's going down. Imagine these are red days. It's going down and down and down and down and down and down and down. So I'm going to start buying. Every time that it goes down, I'm going to start buying the stock, right? It has to go up from here. It has to.
Of either colour appearing has not changed. This is why it's called a fallacy. It is a mistaken belief based on unsound arguments. To date, the longest recorded streak of one colour appearing in roulette happened in 1943. The colour red appeared 32 consecutive times.
What? I think after 31 consecutive times, I'll be like, this shit rigged. I would absolutely be throwing stuff across the casino table. This is so rigged. How could it be 31 times in a row? And then the 32nd? Good gravy.
And with each spin, the participants were sure the next colour would be black. But why is this important in trading? Well, it's because although you may have a trading strategy with a positive expectancy, just like a casino, a losing streak can occur at any time without reason. It does not mean the strategy is flawed. Just like the roll of a dice or a toss of a coin, a trading candle has no memory. Mark Douglas summarized these flawed psychological biases by saying, when you achieve complete acceptance of the uncertainty of each edge and the uniqueness of each moment, your frustration with trading will end.
Okay, so this goes back to what I'm talking about earlier in my 3 trading psychology rules, right? I have no expectations on the outcome of any one individual trade. Over a series of trades, I can mathematically prove I'm going to be a huge winner. I can prove that because I have the data. But each individual trade on its own, I do not know what the outcome will be. And neither do you. I do not know on one individual trade what the outcome will be. And because of that, we always need to be thinking about being risk first. I'll give you risk as well, by the way. We haven't had any in a hot minute, so I'm going to give you risk. Reduce risk, right? On any one individual trade, we do not know what the outcome will be, so we always need to be looking to reduce risk against us. Remember, all stocks are bad, but every once in a while they act right. Our job is to wait, sit in cash and don't F up, right? Sit in cash. Let me do this on screen, right? Sit in cash and don't F up, because at some point, we will get the stocks acting right, like they are at this very moment in this market right now. The stocks are acting right. If we don't sit in cash and don't F up, we have the opportunity without having drawdowns against us, right? You don't want to be going into your next trade off of the back of a drawdown. You want to be waiting, stair step, waiting, stair step, waiting, stair step. That is a successful portfolio. It's not the boom and bust cycle that you've probably gone through. I've gone through it too, where you're riding high, thinking everything's great, and the next thing you know, you're getting absolutely monkey hammered. And then you get some great trades, and you think you're so smart, and then you're getting absolutely monkey hammered, right? Up and down, up and down, up and down. Or you do like Corey says, and sit in cash and don't F up. In the meantime, until you get the stocks acting right. 32 reds does sound like a trend to me, but I'm telling you, David, you and I, we would be tag teaming, throwing this table over and saying, this is rigged. Call the police. They're stealing our money.
Understanding that losses are an integral part of trading will provide some comfort when your results are not going your way. Legendary trader Mark Minervini himself says that he builds failure
Mark, he's one of my mentors. I know Mark.
Into his system, meaning that he expects his trades to lose 50% of the time and his other trades to win 50% of the time, albeit his winning trades will be larger than his losses when they occur. If you step back and really accept that losses are at the core of most successful strategies, the acceptance of their occurrence is far easier to digest. It is the managing of these losses that really makes the difference. If you allow a loss to grow out of control, it could make your winning trades less significant. Accept that you will have many losses, keep them small, and make them a core focus of your strategy.
Boom. I agree completely. I will give you let winners run in this case. I'll give you that one, Bjorn. I'll give you that one. Sit in cash and don't wait F up and then wait for the outlier 9. And I know it's hard. Listen, I know it's hard. I know it's so hard to sit there and you're like, I don't have anything to do today, so I should go trade. Right? I know that is hard. And that's why SGov, which we only recently learned of in the last couple of months, is so great. Because you can park your money in SGov and it's almost exactly as liquid as cash. Almost. I mean, you have to do like a couple buttons to click in and click out. But it pays you daily interest, right? So this is it. Some brokers offer interest on your unused cash. Mine doesn't. So this is a way that I can do that. And it's a lot easier to sit in cash when you're getting paid interest on that cash. And then when you need the money to trade, you sell out a portion of your portfolio, go trade with that portion. Then when you're done, put it back in. It makes life so much easier. So much easier. Paul says cut losses. I'll give you that one, Paul. I'll give everyone that one. Thanks to Paul. Thanks to Paul. Let's pay respects to Paul in the chat. Wait a minute. Why do I have Charlotte on here? Charlotte, I'll give you that one too, since you just popped up on here. All right. So if you want to pay respects to Paul in the chat, go for that. Or if you want to pay respects to Charlotte in the chat, or both, you could do a P and C. P and C. You could do Paul and Charlotte P and C like that. Okay. Go for that one. Go for that one. Go for a P and C. All right. Let's go.
Ultimately, embrace the prospect that losses and wins are an inevitability within any strategy, and any outcome is just as likely as the other. Mark says if you can't learn to accept small losses, sooner or later you will take big losses. A key factor to becoming a disciplined trader is the merging of expectation with probability, which ultimately provides the foundation for unemotional trading. The ability to accept trading unpredictability in the short term, but equally have faith in the law of large numbers in the longer term, is what separates the professional from the amateur.
And that specific thing right there is where I'm at in my life and where I'm trying to get you in your life, right? Imagine I'm Gandalf, you're Frodo, right? Imagine I'm Obi-Wan Kenobi, you're Luke Skywalker, right? All those hero's journey things that you're on, right? Imagine I can be your mentor and then you can go be the hero of your own story and you can have generational wealth-changing activities that happen, right? But you cannot do this if you have no discipline to follow the rules. Create your own rules. I give you mine as a template. Create your own rules. But if you can't follow those rules and figure out what tweaks you need to make to fit your lifestyle and your personality, and then execute on those, then you're never going to be successful. I don't know anybody who's traded into millions and millions of dollars based on gut feel. Gut feel is just an it's an imaginary signal. If you can minimize risk, maximize your profits, and do that repeatedly, then you can be successful.
You may know the concept of a bell curve. The concept plots a distribution of data points and is used as a measure of probability and deviation. In this example, we keep the concept simple. In the middle, we have trades with an average return. To the left, trades with poor performance, and to the right, good performance.
Ooh, I have that. Hold on. Sorry, I already closed my spreadsheet. Let me pull it back up. This is so cool here, right? This is so I provide you the spreadsheet. Now I know Mahesh at one point wants to build this into OVTLYR, so that'll be coming at some point here. But here we go. Here we go, right? Now, Poor performance is on the left-hand side, okay? Average performance is in the middle. And then outperformance is on the far right-hand side, okay? So what you want to do is you want to maximize basically everything from the middle, and then you want to go as far off to the right-hand side on these tails, giant right-hand tails as you possibly can, right? But you don't want those to the downside. You don't want those.
The neutral return is plotted centrally on the chart, and each trade, which remember is a random event, is plotted based on their return. A trader makes perhaps 10 trades, providing random results. At first glance, in the short term, the review would suggest a losing strategy or a strategy without positive expectancy. But remember, a statistical edge should only be measured when we have enough meaningful data, not on a micro level with such a small sample size.
Which is what I mentioned earlier, right? My sample size is not very big this year, only 23 trades. So we can only make inferences on how well this is going to go, how far this is going to go, because this will evolve and this will change and adapt. I agree. The minimum is really 50 to 100 occurrences. But I don't know. I mean, all of last year I only traded 49 times. So I don't trade all that often. But when I do, I try and do the best that I possibly can, right?
The predictability is determined by the law of large numbers. Once we have a large data sample, we can then determine if a statistical edge is present. We already knew from the position of the bell curve.
You know what? Hopecast, this does count as journaling trades. Yes, because the only way you achieve this outcome, the only way you can see what your numbers are is by journaling your trades. I will absolutely give you journal trades. Good call. Good call, Hopecast. Inference is too big a word for me. Somebody made a Dos Equis meme. Hang on. I saw it the other day in our memes, our OVTLYR memes channel. Hold tight. I should have done it that way because that was actually really good. It was almost that one. This one here. I don't always trade stocks, but when I do, I use OVTLYR or risk first, my friend. Yeah, I showed these to my wife and she's like, that is so weird. She's like, that is so weird. And I was like, you know what? That dude looks pretty great. I mean, he has more hair than I do. So only if things work out where the hair grows back on my head is this going to be real. But I like where it's going.
That the large majority of trades were positive in comparison to the losing trades. And this provides some predictability on a macro level.
Okay, that's good. I like this. I don't trade often, but when I do, I win the shit out of it.
The level at which a casino bases its model. Casinos are aware of the need to pay out infrequent large winnings to the minority, but the positive expectancy built into the game will far outweigh those costs. A previous video on probability and expectancy helps explain the theory in greater detail. Leaning on my own trading experience of more than 30 years, I know with certainty that my personal approach will see periods of lackluster performance, followed by periods of outperformance, but by position sizing and managing risk accordingly, the losses and psychological biases are well anchored. In recent times, we have seen a dreadfully volatile period, and most long strategies would have suffered. Myself and many others, on the other hand, remain unnerved, focused on the process, and well prepared for the longer-term market expectation. Once we understand the probability at a macro level, we can set the expectation. And once we have set an expectation, we can ignore the random results over the shorter term and stay disciplined to the strategy. My approach has that long-term macro expectation, and I tend to measure it through the R distribution, which is simply the risk taken and the reward achieved.
Okay, so imagine this is that bell curve we talked about, right? You want to have plenty of them in the middle. That really doesn't change a whole lot in your portfolio, right? The plenty in the middle. Some are going to make it go up, some are going to make it go down. But these long fat tails over here, that's what that's called, a long fat tail. That's what you're looking for, as many of these big long fat tails as you can.
For example, I know that many of my trades will lose up to 1R, whereas my winning trades are spread from winning 1R through to winning 10R, or 10 times my risk.
You know what? Hopecast is totally right. This sounds like a high probability setup. It sounds exactly like a high probability setup. I agree. We're close. How many we've got? 2, 3 in this direction, 2 in this direction, 1 here, 2 here, 3 here. We're getting close.
Having this predefined probability and expectation over a large sample of data makes it easy for me to stay calm when I get a series of losses. Another great quote from the late Mark Douglas said, "When you really believe that trading is simply a probability game, concepts like right or wrong or win or lose no longer have the same significance." In summary, the journey to becoming a successful, disciplined trader requires us to accept that the market does not care about us. We must accept that losses will always come our way, and we should build the management of losses into the core of our strategy.
Okay. We're almost out of this video. So let me see, where am I going to give you more? Hang tight. You guys put it in the chat where you think I might have missed something.
Stop focusing on the rewards and stay focused on the process. Understand that anything can happen. A singular trade is unique and has no memory. Know the longer-term statistics of your strategy and ensure your expectations are aligned. As always, thanks for watching. And if you need help...
I don't know about B5, guys. I think you're just trying to get that easy bingo win. Hey, Rick is saying every one of our trades is smashing through the 1 ATR right now. Is that true? Is this true? Let's go take a look at that. Let's go take a look at all the trades we have on right now. All right, so let's start with... well, Celsius is up, but it's not up to the 1 ATR just yet. Morgan Stanley down slightly. KKR is up. Nice. Capital One Finance. Oh, there we go. There's a 1 ATR right there. SMTC. It's going sideways. The Frog moving up a little bit. PayPal moving up a little bit. Nvidia down slightly, but that's okay. We have Rick says, well, maybe not all of them. That's okay. I got a flurry of notifications. Here's the deal, right? We have a plan. Whenever we execute the plan, great things happen. So tell me, what else are we missing here? I think I need to add trade what you see, right? Because we talked about that earlier, right? Don't tell the market what it needs to do. Trade what you see. I feel like the only way you're going to be making money is if you have great entry signals. Yeah, great entry signals. Oh, we're so close. Charlotte says G2 momentum. I'll give you G2 momentum. I'll give you G2 moment. Look at this. Oh my goodness, from so many different directions. O2 add to winners. No, I don't think I heard that one. Greg says, like watching you trade to learning a lot. Your genuineness is winning. Absolutely. If you substitute Mark Manavini for the word breakout, we have a bingo. You know what? I like that. I like Mark. I think Mark is a really sweet guy. You have no idea how sweet Mark is as a person, actually. But there you go. We got a bingo right there. We got a bingo. Decadent. No, B5. No. Okay. The next person who pops in, I'll give you that one and we'll see if we get a double bingo. The very next person who pops in. This is the last one I have on here is Decadent Wolf. The next person who pops in, I'll give you that one. Oh yeah, by the way, you can't win unless you put hashtag outlier in the chat. You cannot win unless you put G1. We already had G1. We already had idea. We already had G1. Don't cheat bingo 04. Okay, I'll give you 04. There you go. I'll give you 04. Double bingos, baby. Double bingos all day. Let's go. Double bingos all day. Who wants to win? You got to put hashtag outlier in the chat if you want to win. Listen, it's $10 Amazon gift cards. It's not going to change your life, but it is our way of showing you how much we appreciate you being an outlier. So let's do this. Let's see who is going to win big money bingo today. All right, in 3, 2, 1. All right, here we go. Nothing like fudging the results. Exactly. I mean, it might be too late. Ryan. Oh man, that's tough. Because I know we got more than one Ryan on here. Ryan. Jeepers creepers. I don't know if we're going to find Ryan. Ryan, do me a favor. This is your handle. I want you to type hashtag outlier in the chat right now so we can specifically show you. If this is your handle and you are Ryan, is it me? That is Ryan. Okay, Ryan, congrats to you. What I need you to do, Ryan, is send us an email over at support@outlier.com. Give us your email and we will shoot you that $10 Amazon gift card. So congratulations to Ryan, because that was him. All right, very cool. Congrats to Ryan. Let's do the next one. Let's do a draw again. How about that? Because we got double bingo, we got to give double away. Let's go. Double bingo time. Who's it going to be next? It's not me. Can't be me. Craig. Way to go, Craig. C-R-A-I-G. Granger. G-R-A-I-N-G-E-R. Hey, do you know Hermione? I'm such a nerd. Shut up. Congratulations to Craig and congratulations to Ryan. You guys are huge winners today of Big Money Bingo. like I say, make sure you send us an email over at support@outlier.com. Listen, if you're loving what we're doing, the way that you can pay me back is by making sure you tell people about Outlier, and make sure that, listen, only if you want to save time, make money, and start winning with less risk, click one of these 2 videos. Otherwise, go watch somebody else's channel if you want to lose. But if you want to save time, make money, and start winning with less risk, one of these 2 videos will help you with that. Have a fantastic day. We'll talk soon.
There's money to be made as long as you are smart. Know where you get it and where you get out. Read charts and follow your own plan. Don't listen to jokers, don't fall for scams. Cash for setups and read market charts. Going to cash is a trade, it's not just you or out. Check in with your key at the very start. No expectations on the trade, just execute. Going to cash is a trade, it's not just you or out. Check in with your key at the very start. No expectations on the trade, just execute.